Welcome back. See, what's today? Friday. Those that came to the meetup on Wednesday. Then we were live on Monday. Yeah, that's right. Monday we were live. I had to think about when that was. Well, I hope you had a good week. It's Friday, Foolish Finance Fridays. Would you believe this? I don't have nothing to say. I don't have nothing to report about. Nothing at all. That's just nothing. I don't have nothing to say. Mm-mm-mm. Nothing at all. But I will give a shout out to Free for becoming a new member. Thank you for becoming a new member, Free. 300K earners. D says she doesn't believe I don't have anything to say. Mm. Tara M, what's going on? Benzie06, how you doing? Reach L, Sadie, what's going on? Down to Earth, what up? Stacy G, how you doing? Am I feeling okay? I'm feeling fine. What's going on, Natasha? I just don't have nothing to say. I don't have nothing to talk about. No market rally. Hey, Sabine. No market rally to talk about. Up 500. Nothing about, you know, Bezos moving to Florida, trying to get out of them taxes. Not gonna have nothing to talk about. Just nothing. It's nothing out there to talk about. Nothing. Mm-mm-mm. Not even. I don't even. I don't even have anything to discuss about all the wealth principles in building. I don't know. I have nothing. D. I don't have nothing. I don't have nothing for you today. I'm all out. I'm tapped out. I'm tapped out. All right. Not really. Of course, I got something to say. The South always got something to say. The South got something to say. What I do have is a couple of. I got a lot of articles, but I want to kind of work backwards. Hold on, D, before you show the screen. Um, this will be controversial. Let's start here first. Let's pull here. Let's go in order and go here. All right. So those that have been coming to the meetups and so forth and so on, you know that I always share. I'm ready to. Stacey G, I can't believe you. How dare you? Whose side are you on? Traitor. Uh, um, those that have been coming know that I've been talking about really stressing, emphasizing W2 Millionaire. If you didn't go get the show from Tech Stocks and Jobs, episode 124. I don't know where you've been. I talked about it. I pushed it, pushed it, pushed it, pushed it, pushed it. I've been pushing it in the meetup. I've been telling you to be strategic. Look for jobs that pay you anywhere from 10%, 12%, 25%, or do 10% and maybe a 12% match. Look for those jobs, how to increase your skill set, your funds, this, that, and other. I'll probably be doing. I haven't decided yet. Uh, I'm debating on if I want to do focus on what you should look like as a consultant, 1099, and stocks, and how to build wealth as a consultant in stocks, or do I want to do do I want to do working as a group of consultants? I haven't decided yet. I don't know yet. I'll probably do just a consultant group and then go from there. I haven't really decided yet. I don't know. I don't know. We'll see. I'm still debating on that. On what that could look like for you in terms of like, okay, well, if you're a consultant, what should your infrastructure look like as a consultant? and then go from there. I don't know. Hmm. Hmm. And then when I say your infrastructure, I mean your insurance, your 401k, blah, blah, blah. However, I do know the new rates are out. I want to cover them tomorrow. I do know the new employee employer combined into your 401k now is I think it's is it 73,000. It was at 69. I think it's at 73,000 now, and the new IRA is 7,000, and the new one for the 401k is 23,000. But you all know what I've been showing you, um, and getting you ready for how that could look. I see that the overemployment conversation is picking up a lot more steam. Um, I see a lot of people are like, oh, um, I see I see a lot of people talking about it and not understanding the shut up about it. It's really what I want to say. Everybody want to talk about it, but everybody doesn't don't understand like the tax structure, the nuances of it, the liability of it, and as well as uh, having a plan. Like you can't get in it and not have a plan, right? If you're gonna get in, you got to have a plan, right? You can't get in and like, oh, I'm making all this money, and then you lose one, and then you don't have a plan. Trust me, take it from me, right? The other piece to that is not just the plan; it's the execution of that plan. So, this goes back to this here that I have right here. Um, Setting up this foundation on the chart, understanding, um, paying off your high interest debt. I need to make an ebook on the snowball app versus avalanche, setting up your HSA, your um, investing in yourself, you max out your 401k, all that stuff. Let me pull this up on what I'm talking about. Let's see, what's a good one? Yeah, that. Can you remove the free joint? Can you remove the free and bring the other one back up? All right. So when I say, yeah, yeah. So when I say your plan, like, and this is Foolish Finance Friday kind of leads into this. I show you what other people have done. And if you haven't caught the theme yet, I show you the foolish financial mistakes people make. Listen, a lot of y'all fall in love, and love doesn't pay bills, and love sometimes doesn't make um you don't make the best financial decisions because of love, right? So sometimes you gotta use um, outside help or what have you to make those decisions. When I say outside help, um, meaning like getting with people that's a financial advisor, a legal attorney, whatever, whatever. All right. So here, when I say your foundation, calculating this is important. I don't think many people understand this. In order to know where you want to go, you need to know how far you have come. So if you go over to ssa.gov and type in, you set up your log me ID or whatnot, you'll get a chance to see how much money you have made your entire life. Now, I will say this: for some of you, it may be a little depressing, but that's okay. The goal is to have you understand how much you have made your entire life up until this point, and then understand how long it took you to make that money. But here's the trick. Here's the nugget. you already know what it took for you to make that money. So now it's what can you do to speed up the process in less time, maybe half the time or less time. But now you know what you're what you were capable of. Now can you exceed that? Be your own motivation. You don't have to wait for somebody to tell you to motivate yourself. Be your own motivation, right? Look where you came, where you came from, and where you are now, right? And then where you're going. All right. The next one is paying off the high interest debt, snowball or avalanche. Here, I'm probably gonna add right here. Let's do this right here, right now, and paste. And let's move this guy here, and we'll add this in real time. And what we'll do here is set up IRA, which is a non-traditional. And why, I'll tell you in a minute. All right, so here, maxing out your 401k and your HSA. I figured most people between these two right here, that's about $25,000 to do that. Your emergency fund, you should start it and go from there. And then one other thing we don't have on here is that emergency fund could be in a high yield savings account. Right, so we'll do a high yield savings account, or you could have it in a brokerage account. And I have stocks right here, invest in stocks and so on CDs, right? So again, I'm playing around with this. The reason why I mentioned like a CPA or CFP, because down here you should have a plan, and then up here, after your first year, you should have them review your plan, right? And you can have them, you can pay for a plan or whatnot, but I'm thinking a 10-year plan. The whole goal is to get to, really it's a $10 million retirement. I just got a minimum of 2.5, right? So why? All right. So building principles of building wealth. We need to get an affiliate link for Investopedia. But I got some other stuff in here that I've been looking at, as well too, some other books, but I won't bring them out right now. I'll wait. I'll wait for that. All right. So building wealth, right? Time in the market versus timing the market. So time in the market, right? So let's get into it. Earn money. I talk about this all the time. How are you all going to earn money? What skill sets do you have, and how much can you get paid for those skill sets? And then who needs those skill sets? Right? You can have skill sets, but if don't nobody need them, you don't get paid. That's just it. So somebody has to have a need for your skill set. And how do you find that need? Right? For example, if you wanted to go out and start a dump truck business, what are some of the questions you're going to ask yourself if you want to start a dump truck business? How much is the startup cost? How do you make sure you got the right type of truck? How do you make sure that you have money set aside, payroll, maintenance? Where are you getting contracts from? Who do you need? What type of licenses do you need? Just a whole bunch of things, right? Just to start out with. Okay, that's one. What if you wanted to start a okay, what if you wanted to start a lawn care service? Is it really just getting a lawnmower and then just going to cut the grass? Is that really all it is? I got a truck and a lawnmower and some money and some gas. I got some money for some gas. And I cut the people grass. Is that all there is to it? Right? Think about it. Okay, it sounds like that's all it is to it. Just get up, go knock on somebody's door, ask them can they cut the grass. Now, here's the caveat here. What type of clientele do you want? You want a higher end clientele? Do you want multiple houses? Do you want a good lick, an apartment complex? Do you want a office complex? Like what's gonna be your clientele? How do you want to get your clientele? How do you want to get people trained up? Do you want to have a crew? What does that look like? And it's cool to do the lawn care, but is it just cutting grass? What about pulling weeds? What about putting down grass for patches on the lawn? Trimming. What about care for triggers or uh, worms or insects or something in the like? What about that? Like, do we want to add that as a service, or we just want to cut grass? We won't care nothing about all that other stuff. Lady, you figured it out. Same thing with a car washing service. Like what type of clientele are you looking to have, right? Just things startup costs, right? So earn money. The first thing you need to do is start making money. This stuff may seem elementary, but it's the most fundamental one for those who are just starting out. You've probably seen charts showing the small amount of money regularly saved and allowed to compound over time eventually can grow into a substantial sum. There are two basic ways of making money: earned income or passive income. Now, most of us probably do a little bit of both, but most of us probably make more earned income than passive income. And there's nothing wrong with that. However, how much longer can your body take with the earned income? And are you setting yourself up so that you can have passive income once your body starts to like, it ain't twerking like it used to. The eyes ain't looking the same as they used to, right? All right, so you may not have any passive income until you earn money to begin investing. If you're either if you are either about to start a career or contemplating a career change, these questions should help you decide on what you want to do. What do you enjoy? What are you good at? What will pay well? Drop in the chat right now what you know will pay well right now on earned income. Drop in the chat. I can tell you what works right now, but I want to see what everybody else is doing on earned income. What are you good at? Drop it in the chat. I want to see who's out here. What you doing? What you doing? Where you at? All right. And then the next one is how did you get there? This is why I go back to the pyramid right here is calculate how much money have you made. You got there for some reason. All right. You got there some way. So how did you get there? Right? So how did you get there? Right? I see trades, cloud security engineer. I see you, right? Earn income. And once you understand your earned income, understand the potential in that arena. Auto mechanic, got you. What is your potential? Like what is your growth potential? Like cloud security, auto mechanic, what's your maximum earning potential in that? Right? Just on one job. Just on one job. Engineer, got you. Script and automation, got you. Project manager, got you. We got a whole team in the chat. D, we got a whole team in the chat. We got consultants in the chat. project manager, somebody to do automation engineer. We got an auto mechanic. We put you to work, auto mechanic. We got work for you. Cloud security engineer. Sasha, I know you do cloud security, automation, Ansible, Linux. So we got a whole team right there in the chat. Got a whole team right there in the chat. Now imagine if we could put that together and go after some contracts, or we put that together and go after some, well, not even some contracts, just get some people employed, right? Got a whole team right there, right? And some of y'all that are listening that didn't write in the chat, you probably could be on the team too, right? Tier 1, tier 2, tier 3. Yeah. Scrum, a whole nine, right? So with that being said, that's your earned income. But again, you can also take the next step up and say, okay, how can I make again the most money I can with the skills that I got? And listen, this is something I was having a discussion with yesterday. A lot of people are afraid to make money on what they know. Does that make sense? You are afraid. You see, this is why I had this show on Monday. You're afraid to make money on what you already know. Because you know what? You see everybody out there with the cars. You see everybody out there with the Lambo. You see them out there with the fancy Gucci bag, the Birkins, the long nails, the 26 inches of hair, the stilettos, the trips. You see all of that. I get it. I get it. However, what you fail to realize is your income earning potential with the skills that you have now are 10, 20, 10, 15, 20 years from now of still earning. Now here's the trick. Here's the trick. How long does that car last? How long do those trips last? Those memories are forever, but them trips, hot 3, 4 days, 10 days max. Oh, stomach, I hear you. 10 days max. Right? I get it. So what I'm saying to you is the investment in yourself, back to this diagram right here. This little part right here, invest in self from the jump. That little part right there, invest in self, is key. Without the investment in self, the rest of this doesn't work. Maybe I should make another little pyramid down here, like invest little line down here, invest in self, pull this out, and then have you set up here. Maybe it's another stage. Maybe you need to realize this right here, right? Invest in self. So investing in self comes with a lot of things. Investing in self comes with blocking out the distractions, blocking out the haters, blocking out uh, the noise, and sometimes that distraction um, that you're blocking out um, may not deal with you anymore. May not text you, may not give you the phone calls to check on you anymore. And guess what? That's okay. That's all right. It's okay. Because maybe they needed you not to talk to them so they could go do their thing. All right. Set goals and develop a plan is number two. Um, again, principles of wealth. I'm just this. Right here is what I have done. This right here is what they're telling you. I'm just showing you what I have done and executed and how I did it. Right. Here, save money. This is such a blanket statement. Save money. Now, those that know, I've been talking about that 401k, 10%, 25%, so forth and so on. That's just one aspect of that whole. I don't know, what should I call that, D? What should we call this? I don't know. I know it's called the IBA. What should we call this? I don't know. I don't know. What should we call this? I don't know I don't know what I want to call it. What should we call this? What should we call this? The multi-millionaire strategy, or what we call this? Well, no, right? Well, we're this right here is gonna work for you, but however, you got to add on to it. But this right here, I think, is the kicker. Right here, these two lines right here. I think all of this is the kicker right here. And the reason why I say I think this is the kicker is because lines 12 and line 13 you manage. And remember when they was up here saying that save money and earn money? You earn that money already, but how do you manage that money? Where do you put that money so it can grow for you? And I think that's the piece that gets lost in translation. How do you make that money grow for you? Right? All right. So then it says track your spending for at least a month, find the fat and trim it, set a savings goal, put a savings on automatic, like your 401k plan, high yield savings account. There you go. Invest. You're gonna be investing in your brokerage account. You're gonna be investing in your IRA. You're gonna be investing in your high yield savings account. Well, not your high yield, but your HSA and your 401k. Right? You're gonna be investing all over. What I have not talked about, what I have not added to this whole conversation is real estate. Um, I think that's another piece. I know that needs to be added, but it's in there. But what type of real estate? That's the key. What type? All right. And then the last but not least, the types of investments, right? So again, figure out what your risk is, go from there. Stocks, bonds. I talked about bonds, mutual funds. I'm going to probably do a deep dive tonight and come up with a show on mutual funds, IRAs, the self IRA, all of that. ETFs as well, CDs. Protect your assets. You worked hard, you earned to earn your money and grow your wealth. The worst thing you can do is lose it, right? Insurance. Some people use insurance, IULs. Some people use whole life, whatever. Some people just buy term policies and don't worry about it and just invest. Minimize the impact of taxes. This is where investing in your brokerage account helps. Real estate, being 1099 if you can be. If you can't be, you're W 2. And if you're W 2, you need to buy some real estate in order to do that, right? Yep, I saw IBM stopping the 401k. Yep, yep, I saw that. But it's also the Secure Act is actually making it mandatory that they have a 401k, that employers have to have a 401k, and they have to invest. So I'm not sure how much longer they're gonna get away with that. All right, Roth IRA, Roth 401k. Know the parameters around that. Know the parameters around that. But T, going back to what you're saying about stopping the 401k, now that becomes a question of, like, if you're gonna stop it as a benefit, am I gonna make more money where I can go invest in a non-traditional IRA? Are the rates in which you pay me gonna go up? Right? Yeah, I know a lot of people speak against the 401k. Yep. Um, and this one here, by holding investments in for more than a year, you can take advantage of long-term capital gains tax, which is generally lower than the short-term capital gains tax and income tax, and so forth. And your taxable events. 7, manage your debt and build your credit. You should build your credit from the jump anyway. You're learning to manage your debt and so forth. Maintaining a good credit score, pay your bills on time, keep the credit utilization low, monitor your credit, avoid opening too many new accounts. Here, should I pay off my debts, my debt, or invest? Paying off high yield. I mean, paying off the highest one and then coming down from there. How much money do I need to buy? How much money do I need to buy a mutual fund? There are different mutual funds. Understand what those are. Understand what ETFs are. We should do a breakdown. I should do a breakdown of these and go from there. What is an ETF? What is a mutual fund? What is a bond? What is a T bill? I'll write something out on that. A lot of people speak against the 401k because of the fees and the higher taxes. Can you explain about that, Tan? Well, I think the they speak on the fees, but the fees expense ratios for each of the funds that you're going to get in, uh, or the type of fund or the ETF that you're going to get in. You have to look at that, and then who is managing that 401k? Your Schwab, your Principal, your Millennium. I think Millennium is just an IRA, but that's where they're talking about the fees to manage it. Now, the problem with it is, and this is the thing, you cannot invest in it. You can deny that from your employer and not invest in a 401k, right? And then just get your money and then put it somewhere else. Now the question is, where else are you going to put it? And are you savvy enough and disciplined enough to take that money and invest it properly? Now, with that being said, understand that if you don't invest in your 401k and they have a match, you're leaving money on the table. So there is that caveat. And here's the other caveat as well too. The companies that I'm really trying to get you to target, no matter what you do, no matter how you slice it, they're going to automatically put 10, 12, 25% into your 401k. So you go to sleep, and every month they're going to make a deposit into your 401k for the next 12 months to whatever that total is. Right? So um, you don't really have a choice in that matter because they're making their investment as the employer. So for easy math, I'm really talking about the person that's actually going to put 25k into your 401k. You do nothing. You don't put nothing else in there. Like the guy saying on Set It Off, you don't do no work, you don't get nothing. You don't do no work, you don't get nothing. I'm in a bind, Nate. So yeah, you don't do no work, you don't get nothing. But in this case, they're automatically gonna put 25,000 if you were making 100,000 into your 401k. So what does that look like? Oh, right here. We can go right here to my thingy. Let's say you don't do anything, and you put in 25,000. Is this a good one? Yeah. And let's come back over here. And divided by 12. Let's say after the first year, you don't do anything. 2083. And let's say you work for the company for, I don't know, 7 years. Make it easy. You play the stock market, 8%. Let's say you don't do nothing. So if you didn't do nothing, if you didn't contribute nothing, you automatically get 265,000, give or take, over the next 7 years. If it returns 8, it's 265. If the return is 9, it's 275. And if the return is 7, it's 256. Right? So, you know, I'm just showing you what that looks like without you doing nothing. Okay? It's up without you doing nothing. So next year you can put in 23,000. Let's say in the first year you put in 23,000. That's um 23 and 25 is 48. So that's 48,000, right? Let's say the first year you did something. Let's say the second year and any years after that you didn't do anything. Let's say the first year you did something. And let's calculate that. It's 305. So you see the magic of compound, right? But now let's say you added in your money and their money, right? So your 23.5 is 1875. So 1875 plus 2083. We'll round that up to 4,000 to be easy. All right. So this is after the first year. Now you're contributing 4,000. Boom. We'll leave that at that. And over 7 years. So over 7 years, you'll be at 500,000. Right. And this is just your 401k. You still haven't, you still got money that you need to put into your HSA, right? So in your HSA, you I don't know. I'm assuming it went up to probably about 4,000 or something like that. And in your HSA, is it 321 a month? I think it is. Um, oh, it went up. So hold on. Let's do by 12. 333. So 333. 333. 7. It might get you on the HSA return because you're playing because you could put it and play it in the stock market. Let's be generous and do something like 5. I'm not sure. Let me see what's the average return. What's the average return on HSA? The average rate. See, the interest rate on the average annual rate is 2.5 based on assumptions for you. What's the average return? 26. Okay, they say you can earn an average of 8%. So okay, we'll go with 8. We'll stick with our 8. Right, and let's calculate that. So in 7 years for your medical expenses, because you can't touch it until you're 70, you can have 42,000 there. And now let's say you put in this month, like there's some jobs that can you put in 150, they match it. So you put in 150, they match. So let's say you held this account for 25 years. Just every year you're just putting in 333. And let's calculate that. So for your retirement, right, you can have 319 sitting there for your retirement on just that, right? That's just your HSA, right? That's in 25 years. The other one where we were at 48,000, and I changed that to 25. I forget what it was. 1875 plus 2083. My numbers may be off because 23,000 there. My bad. I should have did that first. 1916 plus 2083. 4,000. Okay, cool. 4,000. All right, in 25 years, Let's say you calculate that it'll be at 3.5 million in 25 years, and the other one will be at 300 something thousand. So you're looking roughly almost at 4 million in 25 years. That's if you start now. That's if you search properly, get your skill sets up, invest in yourself, and go from there. Right. So why am I talking about all of this? Well, let's get into this conversation. Let's do this one first. This is an analysis of financial institutions in Black majority communities. Black borrowers and depositors face considerable challenges when accessing banking services. So I brought this up because a lot of times you'll find that, okay, I need to get a loan. But if you over here pulling down and got your skills up, you could have your money in a high yield savings account, or you could be borrowing from yourself. You could be you could use the a loan out of your 401k for a down payment on your house. You could be using your brokerage account for getting money and doing something with it. You can use your brokerage account and leverage that and take a loan against your brokerage account. There are just different ways to do this, right? So in my mind, in my thought process is how can you how can you all win without the bank support? What are some ways you can win without bank support? Could you be getting grants from the government? Could you be utilizing the structures that they have in place? What's going to be your thing? Because we see the articles and we know these conversations, right? Let's get into it. An American dream, the opportunity to succeed to provide food and shelter for family members, education for children, hope for a better life and freedom. Opportunity requires capital. But in the United States, access to capital for individuals and business owners is uneven based on race. The racial gap remains significant. In 2019, the median net worth of the typical white household family was 182,000. It was 7.8 times greater than that of the typical black household of 24,100. Right? Most houses are bought with a mortgage, and most businesses rely on credit to fund their expansion. All right. So, well, I don't know. What are your thoughts? D, feel free to chime in. What would you do without a bank? What would you do if the bank wasn't holding your money? There are a lot of fintech startups out there that are black owned. I looked at a couple of those. I looked at a couple of uh, uh, some people are into crypto, blockchain, whatever the case may be, right? You could use an annuity. You could use an annuity. I'm just trying to get you to think outside the box, right? Because the first thing we say, I need to buy a house, and the second thing we say, I need to come up with 20% down payment or 3.5% down payment. The other one is I need to get my credit up. The next one is I need to make sure I can cover it. I need to make sure I got this thing over here, this debt paid down. My DTI is good. And the last thing we want to do is go to the bank and not be ready. So we do all this work to get ready to go get money from someone else who's going to scrutinize us in a way, right? And I'm not saying don't use the bank. I'm just saying what are the alternatives if you can't get approved from a bank? What are your alternatives? I want you to start thinking outside the box. I want you to start thinking about how can your skill sets help you get that real estate option or that land or what have you. How does that work? How do you think outside of the box? How do you creative financing? Uh, what does that look like for you? If you're able, listen, some of y'all are gonna be renters forever. I remember me and Dee went to an apartment uh complex, and we was talking to a lady, and she's like, "Oh yeah, some of our renters, they've been in here for 34 years. They've been renting for 34 years. 34 years they've been renting. 34 years. Can you imagine renting in a place for 34 years, and then at that last little time they went up, you can't afford the rent? And so you've been renting in this place for 34 years. You have never pulled, or nobody's ever helped you pull your resources together. That's why they came out with the app or the application to say, okay, well, if you've been renting, you could join this program to show that you have good rental history, and this will help you get your into a house or what have you. But imagine nobody. The only thing somebody knows, you've been renting an apartment for 34 years, and you don't have a down payment for nothing. You don't even have an emergency fund, right? So let's get back to it. It says this report documents at a local level there are stark contrasts into access to credit for African Americans, interest rates on business loans, bank branch density. Have y'all seen all the banks are closing? Have y'all seen the bank closing the branches? Have you seen that? I don't know if y'all been paying attention. Bank branch closures, right? Have y'all been paying attention to this? All right, bank branches closing in October and November, right? Wells Fargo, Citibank, Morgan, JP Morgan Chase, Morgan Stanley, Bank of America. Right here, listen, look at this. As bank customers move online and make fewer and fewer trips to local branches, many national financial institutions are closing down locations. This is not a new trend. Insider Intelligence reported that between 2017 and 2021, 9% of all branches, 7,000 of them closed their locations. So here's the thing. Let's really analyze this. Baby boomers who don't want to do banking online, how's that going to affect them? In particular in the Black community, Gen X, as they get older, how is banking online or being wanting to talk to someone or whatever how is that going to affect them as well? How does it work with people with disabilities? What does that look like? How do you get people back and forth who has a disability? You need to talk to somebody in person. What about people who can't hear? What about the people who are in the Gen X and younger, who are not financially sound and don't even understand how to read and write? They may need somebody to walk them through the process. I'm just trying to point out to you what your future could look like, but how do you be self-sufficient in your own future based on your skills, based on your own money? How do you put this aside? I know it's Foolish Finance Fridays. I get it. But I'm just pointing out to you some things that you just might not have noticed. All right. All right. Here, let's hop down here. It says Section 1 reviews the history of credit policies. Section 2 presents a granular evidence of inequalities in access to banking services, including bank deposits. Section 3 focuses on residential mortgage credit supply. Section 4 turns to small business lending. And Section 5 suggests a 21st century agenda for lawmakers and academic researchers, right? Historical context, removal of Africans from their rich commercial environments in the kingdoms, including Ghana, Mali, Songhai, through the slave trade between 14th and 18th centuries did not destroy our proclivity for business and trade. Since the time when Black people in America secured the right to earn capital for their labor, allowing the emancipation, they faced systematic financial discrimination with respect to banking access, and fees. Right? So here they go. Over a century ago, racism, segregation required Black people to pool their resources together to support each other, and Black-owned banks played a pivotal role or a vital role in economic health of Black communities. Now, I know someone mentioned annuities, and we all heard about whole life and this, that, and other, but how can you make sure that your idea of what a bank is, of banking for yourself, is set up properly? Meaning, if I have to go, if I gotta get 20% put down, where can I? How can my skills help me get 20% put down so I can go do X, Y, and Z? Or how can my skill sets help me purchase a home in cash? Now, this sounds daunting. It sounds like, oh, you really trying to get us out here, coals that pole, what is it, coals that poles and coals. Right? I'm simply saying this. As you continue on your journey in tech, how can you become less reliant on the powers that be and more reliant on yourself, and utilize the infrastructure such as grants, government contracting, HubZone to get what you want? How do you do that? Different angle, but it's gonna take time, and you're gonna have to study, and you're gonna have to read through it. Right? All right. Black-owned banks played a vital role in the economic health of Black communities. On October the 17th, Capital Savings Bank in Washington, D.C. became the first bank organized and operated by African Americans. Within 4 years of opening, the bank deposits grew to over 300,000. Between the end of Reconstruction era and beginning of the Great Depression, over 130 Black-owned banks opened, providing a capital to Black entrepreneurs. How can you become a bank for Black entrepreneurs? Seller finances is one, right? In the early to mid 20th century, the federal government took a large role in stabilization and financing of home mortgage market in the United States. In response to the housing market problems brought by the Great Depression, the Homeowners Loan Corporation purchased and refinanced over 1/10 of non-farm U.S. mortgages by 1936. Not to mention we're losing farmland, but that's besides the point, right? So here we go. HOLC subsequently created color-coded maps in 200 cities to better understand the risk of mortgages with the guidance and the expertise of local real estate professionals that reflected long-held patterns of racial discrimination. Did y'all see the settlement on the redlining settlement? Did y'all see that? Right here. That was one. There's another one that just came out. Justice Department secures over 3 million redlining settlement involving SA Bank and Trust in Philadelphia. There's another one that just came out here recently. See, that one is for 31 million right here. Right? I don't know if y'all been keeping up with the redlining settlements, right? It's a lot of them that's going on. A lot of them. Let me see. There was one like this week. Let's go tools. Let's go the past week. Yeah, right. 14 hours ago. Judge pauses deal in Jacksonville on redlining case. Bank settles with DOJ for 9 million to resolve redlining allegations. I don't know if y'all been keeping up with these, but these these redlining settlements have been ongoing, and you don't hear about them in the news. I've been following them. I should do a show on these. It's like 30 different settlements that you're gonna find. You can just do a search for yourself, but you're gonna find different settlements from different banks on the redlining situation, right? Now the question is, who get the money, right? Um, Shortly thereafter, recently created the FHA, which by the middle of the century covered the insurance of one third of the U.S. mortgage, crafted their own redlining maps. So FHA crafted their own maps, right? So when you get that, basically when you get a FHA loan, you're basically paying them for something they already did in the area that you want to live in. Basically, right? Basically, I'm just listen. I'm just reporting to you things that I find and discover. But now let's ask the question: how do we flip the script on? How do we make sure we have enough money for, excuse me, to buy a house? And listen, you maybe we go back and stop buying houses individually and buy acres and have multiple family buy houses. And then family don't have to be your blood. It could be two or three of y'all friends that get together and buy multiple acres for and put multiple houses on there, or big house, and you got an east wing, west wing, north wing, whatever the case may be. However, my goal in telling you all of this is understand how money works, understand earned money and your potential, understand how you can build your capital, right? All right. So now, this period coincided with the second Great Migration, which witnessed millions of Black people migrating from rural South to the cities in the North and the Midwest, given the existing market discrimination that non-minority owned banks practice. Their race-based exclusion of Black people from the mortgage market provided an opportunity for minority-owned banks to provide a service to a much larger market of Black migrants looking to purchase homes and start businesses. However, Black migrants face labor market competition with new European migrants. Like, if y'all ain't paying attention, if you ain't paying attention, like people like history, uh, is history. We don't care nothing about history. All right, here we go. If you don't pay attention to this, it's a reason. It's a method to my madness. However, Black migrants face labor market competition with new European immigrants and legacy Black residents, in addition to the labor market discrimination, which made it difficult for minority owned banks to finance economic efforts. What does that sound like to you? Does that sound like today? Does it sound like what you hear going on today? You got migrants coming over, they get a little lift, a little boot. You're considered legacy Black residents. You're in the labor market. You refuse to take advantage of what's going on in terms of 29 million people need to get AWS certified for free. We got blockchain. We got all these classes for free, and yet and still we worried about the cheesecake lady. We worried about Jada and Will. We worried about what's going on with the list, what restaurants to eat at. Don't eat at none of them. I don't give a damn. However, if you're not paying attention, and I'm trying to prep you now so that you won't be sitting up there like, well, the bank won't give me a loan. Oh, oh, okay. So how much money you got in your 401k? How much money you got in your savings account? What we looking like, right? what we doing, all right? During the 7-year period between 1983 to 1989, the number of black-owned banks declined by 22%, while the total number of banks in the U.S. declined by 12%. Black-owned banks make capital more accessible because they approve a higher percentage of loans to Black applicants than other banks, but their impact is limited by their lower number and often precarious financial standing. Compared with white-owned banks, minority-owned banks are more likely to rely on more heavily on government deposits and therefore hold fewer loans and more liquid assets. The question is, how can you go out and buy a business using your money and have that business help you fund and buy other assets? See, you could buy the block, but why not buy an existing business? It's already making revenue. You ain't got to start from scratch. Everybody want to go build something from scratch. Why? Why y'all always want to start from scratch? Go get you somebody, a CPA, to read them books. Make sure they own the up and up. Read that P&L, profit and loss, and keep it pushing. Come up with a plan. Buy the business. Once you buy the business, get your business structured up, then go buy the block. Just another way. You can use your money to make money, to buy real estate. It's just throwing it out there. We should do a show on it. In 2008, Partnership for Progress was launched by the boards of governors of the Federal Reserve to help promote and preserve minority-owned banks. But despite its effort, the number of Black-owned banks declined from 48 in 2001 to 18 in 2020. 18. Banking access to the Black community has not only been limited by the decrease in the number of Black-owned banks, but an overall decrease in the number of banks in majority Black neighborhoods. You know what the number one bank is in a Black neighborhood? Y'all know what the number one bank is in the Black neighborhood? The church. The church. They take deposits all the time. They take deposits all the time. Since 2020, the number of banks in majority Black-owned neighborhoods decreased by 14.6%, with JP Morgan shrinking its branch footprint in majority Black neighborhoods by 22% from 2010 to 2018. All right, here we go right here. Minority status of financial institutions. Here is what their numbers look like. This is a good one right here. Yeah. No, that's not it, D. This is fine right here. And let me blow it up a little bit more because that may be a little blurry. All right. Minority board and serving Hispanic community, their assets. Minority board and serving Asian or Pacific Islander community, Asian Pacific Islander American, Hispanic American, Native American, Black or African American, Asian or Pacific Islander American got 61 banks. Minority board and serving African American 2, and minority board and serving multiracial community 1. But Asian or Pacific Islander American has 61 banks. Racial inequalities in access to banking services and deposits, right? The lack of financial resources, internet, transportation required to bridge the physical and digital distance. Brick and mortar bank branches are vital, particularly low income and intercity areas. Racial discrimination, various types of market failure have led to banking and credit deserts in underserved rural communities and so forth. I'm going to give you my banking story. So my banking story goes like this. I was buying my house. I pulled out money for my 401k. I got my I was like, oh, let me go cash this check. Let me make this deposit in there because I told them to cut it to me. And so I went to put it in the bank. So I went to the bank up the street from my house, go to the bank. I go in, the lady was like, where you get it from? I was like, I got it from my 401k. And I was like, you can call the bank if you need to verify. I can stand here and wait, this, that, and another. And she was like, okay. And so she holds on to the check, she walks around, she goes talk to some people, this, that, and other. Whoop, whoop. And about 15 minutes later, she said, I can't cash it. I was like, well, did you call the bank? I was like, why you can't cash it? She's like, we don't know where you got this from. I was like, what do you mean? I was like, did you call? Like, did you call? Did you do what you were supposed to do? Like, what do you mean? Like, do you need me to show you where I pulled it from my phone? Okay, like, lady, put the money in there. I'm trying to get my house. Right? So I was like, you know what? I ain't got time for this. You on that. You on that. Right? And so I go outside and I go get in my car. Now at this time, I got a sports car, this, that, and other. And I'm like, I know she's not coming out behind me. So the lady followed me outside the bank. She followed me outside to my car. And she pretended like she was going over to her car. And then she got her phone out and she trying to take pictures and stuff. Like, are you crazy? So I went down to the bank in the white neighborhood. Walk right in. I'm like, I like to make the deposit for this. They was like, sure, Miss Reed, no problem. It wasn't no, we gonna hold your money for a few days. It wasn't gonna, that money was there when I walked in. That money was there when I walked out. They say, is that okay? Do you need anything else? We'll see you later. And I called. I literally called back to the bank. I filed a complaint. I went into the office. I talked to the branch manager, and he was like, "Well, this is protocol for us." I said, "No." I said, "No, it's not." I said, I talked to corporate, and corporate said, um, you can see, like, and this wasn't the first time I had a big deposit. And he's like, you get deposits like this often. So this ain't no new deposit for you. This ain't nothing new for you. And so they were like, you shouldn't have no problem. So he was like, well, what would you like for us to do? I'm looking at him like, yo, what do you mean? What do you mean? And so I was just like, I was like, this just goes to show, like, is it even worth banking in your own community? Is it even worth banking in your own community if you're gonna get treated like that anyway, right? If you're gonna get treated like that, and to be fair, it was a white woman at the black bank, but again, my point is this: if we're gonna continue to grow our wealth and continue to have all these things, I think we also need to take a look at how we bank, where we store our money at, and what does that look like. Right? That's just my personal thought. You all don't have to agree with what I'm saying. You don't have to like it. I'm not telling you. I'm just giving you my opinion of it. And I think you're gonna have to start taking a stance on what that looks like for you and your community. Right? We got food deserts. We're gonna have bank deserts. That's gonna be across. That's gonna happen. But you're gonna have to start looking at, okay, how do we really how do we really maneuver and how do we really move? Just my thoughts, right? And let me see. Bank status percentage by race by 2019. Unbanked, usually high with blacks. Um, Underbanked in the black community. Fully banked usually in the white community. Right? Unbanked and underbanked rates in 2019 were the highest for Black adults, making it more difficult for them to accumulate savings. And so this is why I keep trying to talk about where you're going to put your money at. In a high yield savings account? Are you going to put it in Wells Fargo? Are you going to put it in Neighbor Federal? Are you going to put it in USAA? What does that look like, right? Right? According to 2020 survey data from Bank Rate, minorities, millennials, and Northeasterners reported paying higher bank fees. The data showed that the average checking account holder at a bank or a credit union paid $8 a month in fees, including routine service charges, ATM fees, and overdraft penalties, but fees paid varied by race. White checking account holders reported paying the lowest amount in monthly bank fees at $5, compared to $12 for Black bank holders and $16 for Latino and Hispanic. Majority Black and Latino or Hispanic neighborhoods have fewer options when it comes to financial services than majority of the white neighborhoods. In 2017, majority of the Black zip codes located in metropolitan areas, in particular in the South, because 56% of the Black people live in the South, located in metropolitan areas with over 250,000 people, had a medallion dollar deposit based, I guess, Herfindahl, HHI, of 4,584, while non-majority Black zip codes held a median HAI of 3106, where the higher score indicates less competition. Similarly, majority Latino or Hispanic zip codes had an HHI of 3508 compared to the median HHI 3151 for non-majority Latino or Hispanic zip codes. Access to a wider array of financial services can mean lower interest rates and higher savings rates as banks compete to attract a customer base. Figure 1 shows the relationship between the share of Black, Latino, or Hispanic and white residents in a zip code and banking competition. So let's go down here. Okay, the banking competition is measured by the HHI and race ethnicity by zip code. So on the here, this looks like the HHI index, and this is per Black right here. And blow it up a little bit. And this is per Hispanic, and then here is white, percent white, right? In the world of services, both financial and non-financial are becoming increasingly available online. One might argue that the physical presence of brick and mortar branch in a neighborhood is no longer necessary. Indeed, the biennial FDIC found that the share of bank households in metropolitan areas that used a bank teller as their primary method of accessing their bank account fell from 28% to 21%. Most people are mobile, but the boomers are not. The boomers want to go in. They want physical access. They want to touch their money, right? And then some people don't get debit cards for their accounts. They go in and take deposits out, right? So fintech is on the rise, right? Fintech is on the rise. All right, let me get through here. Another issue is the wire and broadband connection and banking competition in counties. See, it says share of households with wire and broadband connections clustered down here, and then you get further and further out. As that HHI goes up, the less broadband you get. That's what they're trying to show here. I think we were at like 36 or something like that. We kind of dispersed here. The lower that HHI down here, the better we are, right? And so they're talking about the brick and mortar here, concentration of banks, bank branches, and percent of the percent Black by the census tract. This is 2021. This is for Philly. And you can see here like how in If you look closely right in here in the darker areas, you don't really see a lot of dots here. Let me blow it up. If you're looking right here in these darker areas, and I can't get it any bigger. Let me see. Yeah, this is as big as I can get right here. You can see right here, it's not a lot. It's not a lot. 78 to 100%. And I'm assuming this is probably more likely where we live at in the area. Inner city, good luck. Okay, let's go back out. All right, loan to income ratio for mortgage loans in the Baltimore area. Ooh, ooh. Baltimore is the new tech hub. Baltimore is a new tech hub. And then banking competition in urban and suburban areas. And then they showing their graph and locations in Baltimore. Those in Baltimore, y'all can let me know what the bank situation looked like. And then the racial inequalities in access to small business loans. What's the average size of a small business loan for Black people? About 10,000. Small business loan for minorities. Minorities on average. Let's see. They don't give me minority. The most common is health care and social services. That's the most common. Let's see. I want to see the size. I want to know the size. This is 2022. All right, minority firms, gross receipts of all firms. Average annual receipts is 184. Firms with employees pay, all firms achieving blah blah blah. Boom boom boom. Industry and sectors where we actually do our stuff at. So here we go. Transportation. 12% is red. That's administrative and support. 15% is other service like public administration. Real estate is 5%. This is the industry sectors of all minority owned firms in 2022. Wholesale and trade, 2%. Finance and insurance, 2%. Educational services, 2%. Arts and entertainment, 4%. Accommodation and food services, real estate, retail trade, construction, professional, scientific, and technical services. 11 professional, no, healthcare and social assistance. Our largest that we own is transportation and warehousing. That's where we're at. Yeah, G. You said you got done like that. My money market account was in a Black neighborhood, closed by a white lady clerk in Cleveland years ago. Closed my account for 83 cents over. Yeah, yeah, right. So this is where we're at. This is what we like to open up and own. And then here, all minority owned firms by state. Georgia with 400 to 800K, Florida, Texas, and California 800K to 1 million. So those that are minority owned, you really opening up. You're doing good. You're opening up in states that don't have income tax, but they red states though. Florida and Texas and Cali. Florida, Texas, and Cali. Less than 20K out here. We ain't up here. This ain't where we live. Wyoming, Montana, Idaho. Idaho. we we don't deal with that up there. We ain't up there. Right? Uh Kansas, Arkansas, Kentucky. I get it. Maine, Vermont, New Hampshire. Y'all ain't fooling with them. That ain't where y'all at. But you do fool with the Georgia. You don't fool with Mississippi and Alabama. Alabama, excuse me. I get it. But Texas, and Florida, right? That's where y'all at. That's where y'all opening up stuff at. I like it. All right. No more doom and gloom, D. No more doom and gloom. This is from Brookings. I don't know. We'll just go through this real quick. Because I'm gonna do the women next week. So we'll do the men this week, and next week we'll do the men this week, and we'll do next the women next week. All right. It says in here, I'm hopping down here. It says the bipartisan commission consisting of 19 members will investigate potential civil rights violations affecting Black males and study the disparities they experience in education, criminal justice, health, employment, fatherhood, mentorship, and violence. The commission is required by law to report annually and make recommendations to improve social conditions and provide guidance for Congress on the effective strategies to reduce the racial disparities in educational, criminal justice, health, and employment. All right, fellas, listen up. What you see here is this is one area, and that is where it's reasonable. Witness the creation of the 2019 of a new commission of social status of Black men and boys, charged with recommending policies to improve upon or augment current government programs. Listen, this is your options. Here are the people you need to talk to. You want to change something? You can't change it on the podcast. It's not going to happen. They already have a commission where you can go report to. The Commission on the Social Status of Black Men and Boys. Go find out who's over that. There's one for women too. That's why I say I'll report on that too. Right? What is this in charge of? It consists of 19 members who investigate potential civil rights violations affecting Black males and study disparities that they experience in education, criminal justice, health, employment, fatherhood, mentorship, and violence. This is who you should be talking to. This commission is required by law to report annually and make recommendations to improve social conditions and provide vital guidance for Congress. For Congress, right? For Congress on effective strategies to reduce racial disparities in educational, criminal justice, health, and employment. The legislation to create the commissions was introduced by the House Representative Frederica Wilson of Florida and sponsored by the Senate by Marco Rubio, Kamala Harris, Cory Booker. This is a welcome and positive development. It will be important for the commission to fully understand the challenges facing Black men in order to target policy appropriately. Black boys and Black men in particular run the gauntlet of specific brand of racism and sharp intersection of race and gender. There you go. They talk about education. 28% of Black men between the ages of 25 to 29 had a bachelor's degree. compared to 30% of Black women. Overall, over 40% of white men and nearly half of white women, according to 2019, right? The gap is greater still at higher education level. Only half of as many Black men have a master's degree at 4%. Black women 9%, white women, white men 8%, and white women 13%. Right? Young Black men are poorly served by schools. The percentage of 25 to 29 with select levels of education attainment, and they just showing this out: bachelor's, master's, associates. Upward mobility, dropping down here, it said Black men, by contrast, are much less likely than white men to rise up by the income ladder, according to Raj Chetty and his team of Opportunity Insights, who have crunched the numbers on 20 million Americans from 1978 to 1983. A third of white men raised by low-income parents end up in the top 40% of the income distribution, compared to only 19% of Black boys. The list goes on. Black boys are most at risk of being stuck in poverty. What does that look like and why? And they go through and show you here, right? Earnings. Black men earn $378 less per week than white men, and $125 less than white women. Overall, white women have seen the biggest increase in earnings, overtaking Black men in the 1990s. Black men earn less than white men and women, right? And Black women are right below that. This is 2019, so we got some years here. Labor force participation. The labor force rate for Black men aged 20 and over is 5.6% points lower than white men. Black men are less likely to participate in the labor force. Labor force participation rate age 20 and over annual percentage. And they're saying down here in 2020, sharp decline. Of course, we know what happened there, but less likely. Unemployment during the 2020, Black men are less likely to be unemployed. Life expectancy, which is about right. Life expectancy at birth is 6 years lower than the age of 65, but for Black men, the gap is over 9 years, showing that Black men are most likely to die prematurely. Black men die 4 years earlier than white men, right? Let me go through criminal justice. We got that. We've seen that. And the case for action. Here is the case for action. Here is what they're looking at. Here is where y'all can go and file and get together and make changes for yourself. I'm just reporting it. All right. So why did I report it? Everybody wants to have a podcast and talk about change and talk about wealth and talk about economic growth and talk about what we need to do. But there are institutions, there are structures set up, and you need to either get involved in those institutions and in those structures so you can have a voice, or you're going to always be sitting on the sideline. And if you are going to sit on the sideline, where are you going to put your money at, and where you're going to put your skills at, and where you're going to work at, and what does that look like? So putting all those things together to make your situation better, whether you're a Black man or a Black woman, that's a discussion you're going to have. Go from there. That's what my report is. All right. Doom and gloom over. Mortgage rates are dropping fast after a shock of jobs report set off a series of dominoes effect on Wall Street. The housing market can thank Detroit striking auto workers. All right, in our upside down economy, where good news for ordinary people means bad news for financial markets, worries about an overheated labor market pushed 10-year Treasury yields to their highest levels in 16 years. Have y'all been looking at these treasuries, these bonds and muni bonds? That put pressure on stocks and lifted the average rate of America's most popular mortgage into yet more inaccessible territory at 8%. But everything must have changed on Friday when the Labor Department issued its monthly jobs report with a shockingly low number. Just $150,000 were created last month. 20,000 fewer than forecasted, and barely half of the 297,000 gains seen in September. The news helped push the average fixed mortgage rate to 7.4%, its lowest levels in 2 months, relieving some of the pressure on the housing market. If it dropped down to 6, are y'all gonna go buy or y'all gonna wait for 3? If it dropped down to 6, are you buying or you gonna wait for 3? Right? So the mortgage rate right now is 7.4%. Bank of America notifies customers of temporary industry-wide deposit delays. BOA. Bank of America mobile app flashed a message on Friday, said that the customers could be facing temporary delays in depositing funds into their accounts after a technical glitch impacted multiple financial institutions. The issue could be stemming from the clearinghouse, a core payment system infrastructure owned by some of the largest commercial banks in the world. TCH has experienced a processing issue with a single automated clearinghouse. TCH is working with the impacted financial institutions on the matter, a spokesperson for association said in an email. Besides, we'll close that one out. Besides the issue of also impacting apps such as JP Morgan Chase, Truist, US Bancorp, according to the outage tracking website downdetector.com. The banks did not immediately respond to requests for comment, right? All right. Magic Johnson, let's celebrate. Magic Johnson is now a billionaire. Decades later, after turning down a Nike deal that could have netted him $5 billion, he is now a billionaire. He has joined the billionaire club. Who else joined the billionaire club? Taylor Swift has also joined the billionaire club. So Taylor and Magic are now in the billionaire club. So I wanted to do a little digging. This is what I came up with. Billionaires by number, but not only that, where do the billionaires live? Congratulations. Give a round of applause. Round of applause. Make your hand clap. All right. So let's hop down here. And I thought this was cool. It shows you in March of 2020, the state with the billionaires. So let's go here. And let's blow this up right here. In the first 3 months of the pandemic, Florida 56 billionaires net worth jumped 15.5 billion, more than the state's 8 billion budget gap. And then they got a list of the billionaires in the state. List of the billionaires in the state. I thought that was interesting in case y'all ever wanted to know who are the billionaires in your state. Here are the billionaires in your state. This is Florida. And you also got their primary source of income and the industry in which they're in. Primary source of income and the industry in which they're in. Right? I see a lot of finance and investments, real estate, finance, investment, and real estate, media, entertainment, service, sports. Oh, John Henry. Technology, James Clark. Oh, Netscape. Oh, yeah, I remember him. I think I met him. Ironically. Randomly. Part of the Well Group. Sports, food and beverage, energy, technology, IT outsourcing, and so forth, right? So if we went back over here and let's go, where y'all want to go? Y'all want to go California? Sure, let's go California. 154 billionaires in California. 154 billionaires in California. At the top, Technology, 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 automotive, technology, real estate, technology, technology, food and beverage, technology, technology, finance and investments, technology, manufacturing, technology, 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 fashion, media, mostly technology. All right. Let's hit Texas. Texas has 56 billionaires like Florida. We see here technology, energy, finance and investments, food and beverage, energy, pipelines, technology, real estate, healthcare, telecom, energy, right? Energy. And last but not least, you all pick the other state. Is it New York you want to go to? What's another state? You want to go Colorado, Idaho, Montana? Okay. Let's go Montana. 4 billionaires live in Montana. Colorado is here. 8 billionaires live in Colorado, and somebody say New York. All right. In New York. 118 billionaires in New York. They consist of media, finance and investments, finance and investments, finance and investments, real estate, energy, finance investments, real estate, energy, finance investments, manufacturing, healthcare, finance investments, media, technology. So, what does that say to you? In New York, finance investments. In Texas is energy. In Florida, it was. Is this Florida? Let me look up here. 56. Yep. So we got finance investments, food and beverage, media, technology, barely technology, a couple of technologies, like 3 technologies, but really it's finance and investments, right? So those where your billionaires are at. That's what they're doing by state. I get this link. Y'all can look all over the map. I think in the United States there's 758 billionaires. Say check Georgia. Let's see. Georgia has 12 billionaires. 12 billionaires. Media, food and beverage, which come from Chick-fil-A. Sports, you got technology, Ben Chestnut, Dan Cruzes, David Zalik. Never heard of him. Don't know who he is. But they got 12 billionaires in Georgia. Arthur Blank, Home Depot. Um, John Brown, Ben Chestnut, Ted Turner, Jim Kennedy, Pest Control, the Rollins. I didn't know the Rollins were billionaires. I could see it, but I didn't know they were billionaires. All right. So you're living amongst billionaires. You can ask questions too. All right. Let's go here. I wanted to go here because Charles Schwab is closing some offices and they're getting layoffs. I'm pulling my money out of Charles Schwab. I don't know what they got going on, but I'm jumping ship early. Parachute. Um, Google has Google $15 billion housing development deal dies. Google is among the 4 California tech companies that are laying off 1,700 workers. Google and Charles Schwab are laying off, right? Let's see, let's go here. Now, I was looking at this as well. How can AI fuel financial scams online? How can AI fuel financial scams online? I'm going to leave this for tomorrow. I'll bring this down. I'll put this over here. I'll bring that for tomorrow. Because we got some foolish stuff to get to. We'll talk about this cyber attack that almost broke this bank. We're going to talk about that tomorrow. Yep. How they drained the bank. Can you imagine you got to go, you went to your bank account and all your money gone? This is Charles Schwab right here laying off 2,000 people. We talked about that. No need to go into detail. It's a terrible time to be a millennial. They talked about how the growth they thought the growth was going to affect millennials and then it made the baby boomers richer. But now let's get into our Foolish Finance Friday, our petty tea time, what you came here for. Right? What you came here for. All right. Now, let's get it popping. Where's my thing? All right, right here. Let's get it popping. My ex-husband is suing for half of our children's 529 plan. 8 years after our divorce. Is he entitled to plunder these accounts? They've been divorced for 8 years. He wants half of the 529 plan from the kids. Should she give it to him? Is it legal? He don't care nothing about them kids, do he? He the daddy. All right. Would you give him half if this was your ex-husband 8 years later? All right. I opened up a 529 educational fund for each of our 4 children shortly after they were born. Only one person may be listed on the account as the account owner. So during my marriage, I owned, managed, and contributed monthly to each fund from a joint account. She has 4 children. They got 4 children together. My spouse knew about the funds, but they were not included in our marital settlement agreement when we divorced. The funds were meant to help offset the educational costs of sending our children to college. 8 years after our divorce was finalized, however, my ex-husband has decided to take me to court for his share of the money contributed to these accounts. The assets were concealed by during the marriage. One fund earned 3 times the amount of our personal contributions in interest alone. Will my ex-husband be entitled to half of our actual contributions made during the marriage, or half of overall account values, including the contributions and earned interest? Should the ex-wife give the ex-husband half of the 529 plan for the children? Is that fair? Ladies, if you have money put aside and your ex-husband is on the account and you contributed to that, would you want half of the money from your kids' 529 plan? Who gangster out here and won't have? Who gangster? Let's go. It says, congratulations on setting up a tax advantage 529 accounts when your children were born and staying the course. You did the right thing. I'm sorry your husband has decided 8 years later, 8 years after your divorce, that he deserves 50% of these accounts. What about the kids? What about your friends? And it be around. Mm-mm. He won't have the you divorced your husband for a reason, or likely several reasons. A judge would not look favorably upon his coming back 8 years later seeking a share of your finances. I would be surprised if a lawyer did not tell you the same thing. Courts have often treated 529 plans as the child's property, as the child's property. Even though they're in the parent's name, the law firm, whatever, reviewed a range of cases in states, including Texas, Ohio, and New York, concerning the division of accounts in a divorce. In Ramsey in Ohio, the court considered the accounts to be the property of the party's children, not subject to division between the parties during the divorce. Courts in Indiana have also treated 529 plans as separate from the parent's property. It says in New York, the parties agreed to share college expenses 50-50 and keep the 529 plan in the wife's names, the firm added. But when she tried years later to use that fact to reduce her share of college expenses, the court said that the account's purpose was to fund the child's education, not personally benefit either party. As these court cases suggest, is complicated. At the time of your divorce, the judge could have decided to split the money in the 529 accounts, even though these accounts were set up to benefit your children's education. They were still marital assets, but not anymore. Timing is important. Typically, all disputable issues must be resolved or else title controls. In other words, if the accounts are controlled by her, she remains in charge. If they were not disputed during the divorce, that's on him and his legal counsel. Otherwise, cases might be subject to being reopened over and over. It is a basic tenet of law that contestable issues or claims must be resolved or they are forfeited unless specifically reserved. If parties agree that later discovered assets shall be divided. All right. It says in New Jersey, a New Jersey divorce alert agrees that they should have been hashed out 8 years ago. Divorce agreements or contracts, and like any contract, they are presumptively enforceable as written, he says. Right? However, in nearly every state, the distribution of assets, like a 529 plan in a divorce, is guided by principles of equity and fairness. A judge, for instance, would want to know whether the omission of the 529 plans from the agreement was accidental or intentional. In this case, she stated that he knew, right? From your telling the accounts, they were not hidden during the divorce, that your ex was aware of them, and they were not included or divided as part of the division of marital assets. As Kessler sees it, your husband is likely out of time and out of luck, right? Out of time, out of luck. All right. All right. I read this one over. This is probably going to cause some comments to come flying in. You ready? Let's go. I'm 35 and mortgage free. My boyfriend is 55, wants me to move into his house and help him pay off his mortgage. What should I do? I'll read it again because it gets even juicier. I am 35 and mortgage free. My boyfriend is 55, wants me to move into his house and help him pay off his mortgage. What should I do? It's all about the love, right? If you love him, you should pay off his mortgage, help him pay off the mortgage, right? I'm getting all these hell no's in the comments. It's love. You don't need to be married to love somebody. What about your friends? All right, let's go. They kill me with this. Look at this. They silly with this caption. All right, I'm 35. I have been dating a man 20 years older than me. He is 55. I have a 5-year-old child. Things were going well until we started having conversations about the relationship being serious and possibly merging our assets. He shared his home with his ex-wife after being married for 20 years. He recently took out a second mortgage on that home. I'll read it again. He shared his home with his ex-wife after being married for 20 years. He recently took out a second mortgage on that home. He has adult children in their late 20s, and they seem to still be heavily dependent on him for financial support. They're dependent on him. This house is the house with him and his ex-wife shared together for 20 years. He wants her to move in and help pay off the mortgage. Yes or no? Okay. He is repaying his own student loans and also those of his children. I own my home free and clear. My student loans will be paid off within the next 2 years, and I made a few good investments, so I have quite a bit of funds in savings and a good retirement account. So she's free and clear. She has one child. His children still depend on him. He got student loans. He took out a second mortgage. He is paying on that. He is also paying the mortgage on the home. He is 55. She is has one child, a good bank account, probably good credit, owns her home, free and clear, has a good amount of money saved up for retirement. He wants her to move in. Wait, there's more. When we discussed taking steps to move the relationship forward and discussed marriage, I expressed that I would be willing. This is where y'all make dumbass. This is love. If it is in love, that's when y'all make dumbass decisions. I expressed that I would be willing to sell my current home and purchase a new home, and that he do the same so we could build a life together. He was completely opposed to the plan. He's completely opposed to the plan. She was gonna sell her home. He was gonna sell his. They was gonna put their money together, and then they was gonna go buy a new home. He 55. She 35. She gonna be stuck with that mortgage if she do it, right? And on top of that, how much can he really contribute? And how much is his home really worth? Stupid. Stupid. All right. He was completely opposed to the plan. His ideal plan is I move into his current house that he shared with his ex-wife until he could pay it off, which will be 10 to 15 years from now. He's 55. In 10 to 15 years, he'll be 65, 70. And then we could purchase a new home together. I'm going to read it again. His ideal plan. His ideal plan is I move into the current home that he shared with his wife, his ex-wife, until he could pay it off, which will be 10 to 15 years. He 55. And then we could purchase a new home together. He said that I could help him pay off his house to move the process along quicker. If we decide to go with this plan, his adult children will inherit the home. He's not willing to compromise in this area, and it has created a roadblock in our relationship. The roadblock was in the beginning. 55 to 35, debt free, no, and he got debt. That was the roadblock first. I do not want to move into his home, and he says I'm being selfish and unrealistic. And she was willing to sell her house to go back into debt with him. Who want to go back into debt with that? Like Sandra. All right, what should I do? What should she do? Drop in the comments. What should she do? We're gonna pull them up. We're gonna pull them up. What should she do? What should she do? Let's see. Somebody said had pick out a plot. What a nursing home. Run. Do-do-do. Do-do-do. Maybe she'll take me back. Was a mistake. I made a big mistake. Won't you forget? No, 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 no. I can feel it. She's never felt before. I really love her. You love her? What? Hey, she said she love him until he dies, and then she gonna be saying he broke my heart, shattered in 1,000 pieces. Oh. She misunderstood the assignment. Older man should bring stability. If it isn't love, why do it feel this way? Listen, I don't know why this is an option. I don't even know why this is a conversation. I'm not moving into your house to pay off a house that you and your ex-wife had together for 20 years. Y'all should have paid that off. What was y'all doing? That's first. Then you taking care of grown adult children. Why? What is going on? I get it. You the daddy. I get it. You the daddy. Rachel, you talking about ain't nobody that sexy. He's sexy, girl. He's sexy. He dead sexy, girl. All right, let's go. Let's see what the answers are. All right, it says, Dear Anonymous, he is the ultimate speed dater. By moving in, assuming he pays his mortgage in full and adds your contribution to the pot, he will effectively have the term of his mortgage. Put another way, you will effectively have the term of his mortgage. You will be helping him build equity in his home. Nice work if you can get it. Divorce is economically devastating for many couples, many of whom end up splitting half their assets 50-50, especially if they both started off in their 20s, had children, and built a life together. It can trigger financial setback of 15 to 20 years, particularly when paying off mortgage is concerned. It sounds like your boyfriend kept the house and refinanced in order to pay off his ex-wife. That plus the burden of these student loans has left him in a pickle. If you move in, rent out your home, and pay him rent for the next 15 years, he will be free and clear by the time he's 70. This sounds like a very nifty plan. He's proposing the detergent and the fabric softener in one bottle. Answer to his post-divorce money problems. He gets a relationship with a woman who has her budgetary ducks in a row and a tenant for two in a 2-for-1 deal. She is the prize. That's right. Don't do it. Read some literature on the subject. Are you sure? I'm sure. Yeah. All right. His plan is non-negotiable. His plan is more likely to succeed if he makes it non-negotiable. So now we have 5 problems. 1, the original proposal. 2, the lack of compromise. 3, his student loan debt obligations. 4, his response that you're selfish and unrealistic. And 5, the 20-year age difference. The last one is not only a challenge because you're at different stages in your life. You're a young mother, his children are grown. You are on the road to fiscal, or I should say financial freedom. He's climbing back into the black after the divorce. You have hearts in your eyes. He has dollar signs in his. There's one thing I do like about this suggestion. You both remain financially independent. Whatever you decide, make sure that this is a core tenet of any plan. You have your own home and your 5-year old child to raise. So I caution against buying a home with him. Paying off your boyfriend's mortgage should not be a part of your retirement plan. I told you I had some doozies. That's the 529 plan. That's that one. We just went through that one. Okay. If I buy a home with an inheritance and only put my name on the deed, does my husband have any rights? Ladies, what do y'all be doing out here, boy? You listen. This is what y'all be like, ladies. Y'all be putting on the cake. Dun, 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 dun. Y'all be putting on the cake. What do y'all do? Get up, y'all get up one day and be like, you're flying through the air, you're like, he's down and out. He needs me. I have arrived. I am your retirement plan. What do y'all be doing? Fellas, y'all do the same thing. Y'all be like, she needs me. Yes, I'll save you. Yes. Yes, you could take out a $70,000 loan on me. Yes, I'll save you. What is wrong with y'all? If I buy a home with an inheritance and only put my name on the deed, does my husband have any rights? Okay. I'm aware that the property acquired during the marriage is generally considered marital property. However, I believe you noted in a recent column that this is true. This is also true of a house purchase during a marriage with only one name on the deed. If one individual receives an inheritance during the marriage, purchases a home solely out of those inheritance assets and places only their name on the deed, assuming there is no mortgage, would the home still be considered marital assets? In other words, if the inheritance is not a marital asset, is the home purchased with those assets also not a marital asset? Would the most straightforward way to manage this scenario be to work with attorneys on an amendment to the prenup? Thank you for any insight. Married but cautious. A property purchase during a marriage with one person name on the deed would typically, but not always, be regarded as marital assets. It will ultimately depend on the laws of your state and whether you live in a community property or equitable distribution state. Under community property laws, anything acquired during a marriage belongs to both parties. With an equitable distribution laws, property is divided fairly, if not equally. The accumulation of marital property typically ends if one or both parties file for divorce. Whether or not the postnuptial agreement or an amendment to an existing prenuptial agreement will be able to ensure such a house purchase becomes separate property will ultimately depend on the laws of your state. But the good news is that some states do permit this. However, states typically do not allow couples to waive alimony rights or child custody decisions. Those are usually decided by the courts. That said, whether your spouse would agree to sign such a document is another question entirely. If your marriage is rocky, it may be a flat out no. Generally, property purchased before you are married is deemed separate property, but the property can be commingled. I talked about commingling. That is turned from separate property into marital property in a process called transmutation, not to be confused with transubstantiation. No. One nation under God? I don't know. I don't know. I don't know. Transubstantiation. I'm assuming that is what it is. Transubstantiation. Here's an example. If you buy a house with your own money before you are married, and then use those funds that's why I tell y'all, stop getting, y'all be single and then y'all have joint bank accounts and then y'all be acting like y'all married couples. But then when you go, you should be, if you single, you got your own account, he got his own account, right? Y'all bring the funds together. You don't need to put the funds in one account. If you buy a house with your own money before you're married and then use the funds from a joint account to pay the mortgage, or use the funds from a joint account to make major renovations to the property, you have likely commingled that asset. Even in Minnesota, which is an equitable distribution state, you will have to make a valid, convincing claim for that property not to be considered community or marital property. The judge in the divorce court will likely have to make the final decision. Y'all love commingling bank accounts. Girl, I'm on. I'm on. Boop, 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 boop. I'm on the account. No. If the house is titled only in one person's name, both spouses have an interest in the house, and one spouse will have to buy out the interest of the other spouse. That's why you end up selling the property. If you buy a house during your marriage with separate assets, tread carefully. It might even be that the titled spouse buys out the interest of the other non-titled spouse, in which case the title will need to be placed into the name of the non-titled spouse after the divorce process is complete. Here's more bad news. According to the law firm, the principle applies to debts as well. If one spouse was left off the mortgage because they had credit problems, that does not absolve the spouse of the co-responsibility to pay the mortgage debt. I'm going to read that again because you didn't hear me. Here's more bad news. According to the law firm, this principle applies to debt as well. If one spouse was left off the mortgage because they had credit problems, that does not absolve the spouse of the co-responsibility to pay the mortgage debt. You getting chopped up anyway. Getting sued. You getting chopped up anyway. To increase in a property's value, the same is true in Texas. Unlike Minnesota, in a community property state, Texas considers the property and the earnings of both spouses acquired during the marriage community property. It does not matter who paid for the property or whose name is on the title of the deed. In Texas, we don't care. As long as you acquired the property during your marriage, it was not a gift, inheritance, or certain kinds of personal injury settlements, the firm adds the same goes for debt with some exceptions. Y'all own it. It's your fault. Both of you all. Finally, an increase in the value of a separate property in some states, including New York, could be seen as marital or community property by a judge during divorce. If the spouse whose name is not on the title can prove that the appreciation was due in part to their efforts, it's understandable that some couples want their own financial independence even while married, and knowing they have separate property can can certainly give them peace of mind. But but in the event that you're planning to divorce, it may be wiser to wait before making this purchase. So, ladies, just because your name ain't on the deed, that don't mean nothing. Fellas, just because your name ain't on the deed, don't mean nothing. You still at fault, my guy. You still need to come up with the money. I ain't even want that house. I don't even know why she got it. I'll leave this right here and y'all let y'all answer the question. We stay at 2-star hotels. That means they stay with the roaches and the bed bugs. We're 70 and have 1.8 million, but my husband insists on living cheap. Don't we have enough? We're both 7. We're both 70. We retired at 62, but my husband immediately went back to work with two part-time jobs. He constantly worries about money. He owns a home worth $550,000 and still owe $128,000 on it. We have a 2.2% interest. My husband makes no sense to take out money to pay it off. We have no other debt. We have 1.8 million in various retirement accounts, both Roth IRAs. We live very thriftily to accumulate this money. We made it, but my husband wants us to live like we didn't have all this money. He hasn't touched the money in the Roth IRAs yet. Don't he have to have RMDs? Or RMDs coming up? He's still worried about turning on the air conditioner, drives an old cheap car, wears old clothing, makes me cut his hair. We do travel, but that's because we use the money from my humble post-retirement job. I'm gonna read that again. We do travel, but that's because we use the money from my post-retirement job. We stay in 2-star hotels. All of our money is in various retirement accounts. Most of these accounts are in his name. Most of these retirement accounts are in his name with me as the beneficiary, even though I worked hard and contributed half. Therefore, I can't make withdrawals. Woo! She contributed because I love him and he my man. I got me one of them. They traveling on her money. He my man and I love him. I feel like now I feel we can live a little nicer. He doesn't. I'm driving a 7-year-old car that I would like to upgrade. We never bought fancy cars, just cheap ones. I would like a Honda, I guess, a Honda or a Toyota. He considers those too expensive. What does this money do for us? Don't we have enough? Now, he got 2 part-time jobs. So is he paying using that to pay the mortgage? Do you have a girlfriend on the side? They 70 years old. You have more than most retirees, so this isn't necessarily a question of if you have enough. It's more of a question of how you and your husband can reach a compromise. Couples have long, beautiful marriages and still disagree on how to spend or save money. That's okay. So as long as there's healthy communication, each person feels their needs are being met. Talk to your husband about why he feels this way. Stop going on trips with your money. Stop going on trips with your money. Maybe he grew up in the hard times and he's never wants to go back to the situation like that. And how she knows she the beneficiary on it? Has she seen it? Has she seen it? Or perhaps he saw his parents or grandparents lose money in the older age, and he's afraid that will happen to him. You won't know until you have these talks, and they may be tough ones. So come prepared. Instead of coming to the conversation frustrated, talk about it over your favorite meal. I ain't cooking. You gonna get this hot pocket. That said, you need your needs met. You're right. You have worked hard and contributed to your retirement. No, to his retirement. You should have a say in how that money is spent. You bring up a very important point about having access to your money. You shouldn't be locked out of your retirement assets. When you decide how much you would like to withdraw, discuss and access to these accounts. Your husband may be cautious spender, but you have equal access. Your mortgage rate is low. The 30% interest rate is currently hovering around 8%. Mortgage current usually aren't considered bad debt. If you can afford your monthly payment, it doesn't hurt to keep money in your retirement accounts. Running the numbers could also help in your journey to compromise. Look at the big picture. How much do you need for the rest of your lives? Here's a rough guide to get you started and so forth. So basically, on some experts argue you can do 3%. Rule of thumb is 4%, but it says if you need 40,000 per year, you could choose to use 3% rate. 40,000 dividend by 0.03 adds up to roughly about 1.3 million. When you do your math, factor in every expense such as grocery, taxes, utilities, medicine, car, home maintenance, so forth and so on, right? And they go on to say about emergency fund and so forth and so on. But she has no access to her funds that she has put into an account with her husband, and he is not willing to give her any money. She has worked. They are retired. They retired at 62. They are 70. So that means in 8 years she has not touched any of that money. She has a post job, and he is using that money to travel on. I'm just showing you what's out here. I won't go over these. We just to end of our show. We went over. Well, how do I cover 3,000 monthly expenses? I'm 58 with 700,000 in retirement, but I won't. I won't collect Social Security to 70. Basically, they don't have enough money. They need to go back to work. In the story on that one, I made $310,000 last year. I have 546 in retirement, but my spouse doesn't work. How can I save more? Last Tuesday. I'm 48 years old. I made $310,000 last year, and I currently have $546,000 in my retirement plan. My husband is on disability and doesn't work, and he does not have a 401k plan. I wanted to open up a Roth IRA, but I read that I make too much money. What options do I have to save more money in retirement? I'm debt free except for my mortgage, which I'm trying to get rid of in the next 2 years before my daughter goes to college. What would you advise? My husband is on disability and doesn't work and doesn't have a 401k plan. She is the nurse with the purse, if you want to look at it that way. Navigating can be complicated, blah blah blah. Even though you have a workplace plan, you can still contribute to a traditional IRA. Though your contribution would be non-deductible, you can create and contribute to a spousal IRA for your husband. And while you make too much money to directly contribute to a Roth IRA, you can contribute to a backdoor Roth IRA. This is what I was talking about earlier about having that backdoor Roth IRA where you contribute, even though you put in your 7,000 for next year, you put in the 7,000, but in your in your Roth 401k, you can put your money in there and then backdoor it into your non-traditional IRA, or if you had a Roth IRA that you were contributing to, you could do that there. All right. So, and while you make too much money, blah 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 blah. As for the mortgage, if your interest rate is lower than 4%, it might be worth not making extra payments either saving or investing that money. High yield savings account, for example, yield 5%, 1 year CDs, or even 5.5. Remember, just because savings or investments aren't in an official tax advantage retirement account doesn't mean you can't use them to fund your retirement, right? Contribute to your IRA, this, that, another. 7,500 for 50 and older, probably went up to 8,000. However, if you and your spouse have a workplace retirement plan, like a 401k, it may be partially deductible or completely non-deductible. Even if you can't take out current tax deductions for your contribution, you still get tax deferred growth in the account. Another plus is the IRA. Single head of household, fully deductible. Married, filing jointly. Married, filing jointly with your spouse has a workplace plan, but he don't. Create a fund for your spousal. Create and fund your spousal IRA. So basically, she's gonna work and fill up the spousal IRA for him. So I guess they'll have two accounts, but it'll be. I'm assuming she'll get some kind of advantage on this. The spousal IRA is no different than the regular IRA. How it's set up or tax benefits. It's not a joint account either. Only the non-working spouse owns the IRA. So she's basically funding his IRA. To qualify for a spousal IRA, you have to use married filing jointly on your income tax and so forth. The backdoor Roth IRA right for you? They go into that. But I just wanted to bring up here, he is on disability. She makes 310. She's trying to put away more money. She has to fund the IRA, the spousal IRA for him, and go from there. So that is my presentation for tonight, folks. I think these have been doozies for you all. Splitting the 529 plan after your ex-husband has long gone for the kids. One. The other one is he wants the girlfriend to move in and they get a house at 70 years old. He 55. The other one is the 401k, and then there was one more that was a doozy. But yeah, I want to give y'all doozies to y'all. Don't forget to hit the like button, subscribe, share this content out. Those that are catching the replay, shout out to you. Replay again. Get your money up. Remember now, where you gonna stash this money? Where you gonna stash? She make $310,000 a year. She maxed out her 401k at what, $23,000. She still got more money to put away. Where's she gonna put it at? Those that want to work overemployed in your W-2, these are the dilemmas that I'll be talking about that you gotta figure out what you're gonna do. All right. Till then, we'll see you later. Don't forget to wear your capes, ladies.